This week on Marketplace, we seek to understand trade finance directly from the experts at Cooperative Bank. From everyday business needs to complex import and export solutions, how does trade finance actually work, and how can businesses benefit?
My name is David Akumu. I head business banking at Cooperative Bank. And at business banking is where we handle the SMEs and the micro customers who are mainly customers in business in Kenya. And we provide them several solutions, starting from working capital, trade finance solutions, asset finance, and mortgage solutions. Basically, we take care of the entire need of banking the MSME customer. So for us to make a decision on the financing of our business, we have to look at the cash flows of the business. How are the cash flows? Is this customer banking? So the discipline also in banking all their proceeds is very important for us to make a decision for if we are going to finance or not. It's also important for us to check on some of these facilities need to be secured. In terms of the cash flows, we also look at the cycle of the cash flows to help us determine the tenor. Do they get their cash cycles? Are they on a weekly basis, on a monthly basis, on every 3 months basis? So that also helps us to determine the tenor and the repayment model to give them so that it meets their business needs and they are not strained in terms of servicing the facilities that we give them. Business sometimes is not predictable. So for a bank, we need to step in supporting the customer when their cash flows are not in tandem. And that's where we come up with products such as invoice discounting. So we've come up with stock financing because they need their stock to be always, they sell the stock. So when we come with the stock financing product, it ensures that their payments have delayed, but they're able to still have stock and keep on selling. So that is one of the solutions we are giving in terms of solving that need. And these are not long-term needs, so we might not go for the traditional working capital, but the short-term loans are much more cheaper for the customer and still does not affect their profit margins. So a business needs to grow because a business starts from point A to point D and their needs keep on evolving every time. So as a bank, first of all, where we start with is ensuring that, of course, you have the commodity to sell. So after that, you might need to transport your goods from one place to another, your small hardware, So that is where we come with solutions under asset finance, where we're giving even up to 100% financing. That's where we're coming in solutions like leasing. Under leasing, it even takes care of technological changes, because you find that maybe you're in the horticultural industry and now it requires you to go for a Euro 4 vehicle, and then in future you go for a Euro 5. So under leasing, it ensures that when those changes come, we keep you updated to the technology and also the stress of disposing the units. Most businesses are not in the business of selling that vehicle. They just want to use it. So that's where we step in under our leasing product. And we also look at the leasing in terms of you need a fleet. So under fleet, banks, when they ask you for, let's say, 10-20% financing, if you need 10-20 units, it will really eat into your working capital. So under leasing, we'll give you 100% financing, and we can give you as many units as possible as per the business need. So that one ensures that we still meet the need for fleet to transport your goods and services, but we also don't eat into your working capital. We're looking at things like mortgages, You want to expand your hardware, your warehouse, So we're looking at financing that through mortgages, which are long-term. And long-term solutions, because this is a heavy capital investment. It's a long-term investment. So if we allow you to pay it for longer, you will not be taking so much of your profits into loan repayments, and that gives you a lot of leeway in terms of managing your finances and your cash flows. The indicators to show that you're ready for farming, for financing is, are you banking? So you need to have a bank account, and sometimes you find people, they're having bank accounts and all over their money, they can't really account for their money. So we are asking you, ensure that your cash is passing through a financial system. So once we have your statements, we're able to determine that you need financing. Your records, do you have your records in place? Are you making profit? Are you making losses? Because you might be making sales, but you're not making any profits at the end of it all. We are looking at regulations. Do you have the certificates to operate? For the county licenses, do you have them or not? If you're highly regulated, let's say like a pharmacy, a butchery, do you have the right documents that allow you to operate legally? So those are the basic fundamentals that we are looking as a bank to finance you. Your financial statements in a financial institution, the records, are they properly kept? And lastly, are you legal? So we want to step into the shoe of the customer. We want to understand the day-to-day operation of their businesses, and what capacity building do they need? Do they need any skilling? So we are saying, once we understand the model of the business that you're operating with, we come in and advise you on the various financing solutions that we have that best suits that need. If it's a need for working capital, if it's a need for logistics, movement in asset finance, we come in. If it's a need on your acquisition of properties, we come in. It might be the property where you want to operate from the premise. You might even have operated in a premise for so long. We come and tell you, you've been paying rent for this much, so let us pay the landlord, and the building continues to be yours. Whatever you've been paying in the long run, you own it. So those are the kind of journeys we are working with the customers, and through, let's say, our non-financial solutions, whereby we're having webinars online every Thursdays, training them on various areas that they need to be improve on. Is it online marketing? Is it the how to handle their taxes? So we are building that capacity. We are having exchange programs, with people, the best in industry. Who is this person who is a leader in this particular sector that they're in? We connect them so that they can benchmark and learn the best. We're even having international trips to connect them with the suppliers, let's say in China. When you take them there, they get the confidence, and they get to know the real person who supplies, and they also get to know the advantages, because there's so many middlemen, and they don't get to benefit the real profitability from the importations. So if we take them for those international exposures, we are connecting them to the real marketplaces out there. Some of the trends that we're seeing in MSMEs, especially in terms of stockades, we've seen that most of the customers have moved to importing. They are really importing goods from overseas, and this one needs a lot of solutions around the financing, the letters of credits, giving guarantees so that they're able to get the goods on time. So that has really increased. There's also a lot of increase also in terms of the trading online. There's a lot of trading online, social media, So these also, the customer needs to speak into that. And as a bank, we also have to look in how do we have the best e-commerce solutions that will enable the online tradings for our clients who are majorly in importation. We are also seeing a lot of need for more affordable products, but high end. So you see, this also speaks into us in how do we get into that space as a bank.
As businesses expand beyond borders, managing payments, currencies, and international trade becomes critical. So, how does the bank support importers and exporters, especially when it comes to foreign exchange?
Treasury Department is what you call the heart of any bank. And in Cooperative Bank, that means we establish relationships with various correspondent banks across the world. So the first point of interaction for any bank in the world is actually through the Treasury Department. So through our financial institutions unit, so we'll always reach out to other similar financial institutions, RMs, just to establish relationships, to open accounts with them, what we call Nostro accounts, just to facilitate payments, that's which is core. Because even if you purchase foreign currency and the bank is not able to settle that on your behalf, that should be a failed trade and it will inconvenience the customer. So the goal of each, and especially our Treasury Department, is to ensure that the accounts that we have sufficient balances and to ensure that the client is able to meet his obligations by the various relationships that we have. So FX or Forex is basically the exchange of one currency to another. And Forex comes about because of trade, meaning trade happened. So when trade happens and I need to pay you in either currency, then of course I'll give you a rate that will give you an equivalent value of that currency to facilitate your trade transaction. So what we usually guide our customers and even the MSME customers, the rules of investment 101, if I may say so, it's never invest in something you do not understand. You're not really the expert, and that's why we have Treasury Departments like ourselves here to guide you and to help you. So one of the things that we do is that we give you a market analysis. What is happening in the market? What is going on? Are the wars affecting the value of your currency? Even in terms of timing, what would be the best time maybe to buy your currency, maybe to convert if you're an exporter and maybe you've received euros or pounds or whatever. How do you also safeguard your returns? So there are different types of products that we have in the FX space or Forex space. From your basic, what we call FX spot, so which means it will be delivered within 2 days. Then you have what you call simple derivatives. So whereby you can lock in a rate today for delivery in the future. So how does that help you as an MSME client? It helps you, one, if you're an exporter, to safeguard your returns, and it helps you budget in terms of your income. The other perspective, also using the same product, is I can lock in a price today also, if I'm an importer, to pay at a later date. So what does that mean? I'm not exposed to market volatility or currency fluctuations. So that helps me maintain the cost and manage, of course, we're all here about safeguarding our profits. So at least that gives you certainty of the price, and you don't need to worry whether euro will be in 2 days or in 3 months' time. because you've already locked in a price. Of course, there are other, should I say, more complicated products. And for those ones, we are very careful to share with our clients, simply because we are guided by the FX Global Code, which essentially says you should not sell a product that is not suitable for a client. So it's always, and one of them can be either an FX option, and an option just means you have the right, should I say, you have the right but not the obligation to deliver. So meaning if I buy an option, it's like an insurance, okay? Of course, I'll have to pay the premium for that insurance. But if the market, maybe it's higher than the price you had set, you don't have to execute that transaction. As a business, there's always a budget that you have. There's always your cost estimates or your estimates in terms of returns, which essentially means you know the profit margin that you want to sustain. So dependent on your budget, then we would come in place to guide you. And just referencing the earlier products I had mentioned, the derivatives products, those are some of the products that hedge you from any market fluctuations. So it's also, should I say, there are also other instruments that you can also use. So for example, you can invest any surplus monies that you have into whether a fixed deposit, a treasury bill, if it's short-term in nature especially, and we give you a return. So essentially your money is also not lying idle in your account. That's also another way of just hedging your or maintaining your profits. I'd say it's always go to the basics. You never go wrong with basics. And I go back to, again, there are budgets that you have. Always go back to what is my objective? That's one. Two, in the currencies or in the markets that you're operating in, ask yourself, which currencies do they accept? Okay, am I able to receive payment or make payment, preferably in that currency, in that local currency? If it's not possible, what are the alternatives? Thirdly, how can I make a payment? Do they accept SWIFT? Can I use RTGS, which are real time? I mean, RTGS payment, essentially it's real time, and you can use RTGS, which is facilitated by the Central Bank of Kenya, to actually make real-time payments in Uganda, Tanzania, Rwanda, even Mauritius. Even locally, you can make payments of euros, dollars, and pounds as well. So it's to ask yourself what are the payment systems? Are there any taxes involved? If I'm receiving money, how should I structure the message? How should I just know your bank's correspondent bank details as well? And then lastly, again, investing 101. If you do not understand, always ask. Read the papers. Go to our central bank website, even our website. Just look at where currencies are, read the Business Daily.
Accessing trade finance goes beyond understanding products. It's about structuring the right solution for each business. So how does the bank determine what a business qualifies for and what they look at before offering financial support?
Trade finance is very transactional. It's all about understanding the shilling end to end. What is your cash inflow, cash outflow? Who are your off-takers? So one of the things that I encourage is be loyal to your bank. Always ensure that all the transactions are passing through the bank. Number 2, engage your bank early. Engage your relationship managers earlier. I always say this, if you see an MSME coming today for financing, they needed the money yesterday. So I encourage and advocate for MSMEs to go to their relationship managers, and you're able to say, this is my short-term plan, these are my medium-term plans, and this is my long-term, so that you are able to walk the journey with the bank and they're able to come in early enough. The other thing I would say is avoid diverting business or working capital that is meant for growth into other, possibly other uses. Well, I would say we look at 4 fundamental things. 1, we look at the business financial health. This is, we look at the ability of the business to generate enough cash flow to service our debt. We also look at the business experience. How is the MSME well experienced with the business? We also look at the borrowing history. And lastly, for us, from a credit risk perspective, we look at the risk and mitigations, which can be in form of a collateral or even transactional structures. At the end of it all, we say for any data presented to us for assessment, there is a story behind it. One of the most critical success factors for MSME is speed and efficiency. And what we have done as a bank is just to be flexible. I always encourage MSMEs, please engage your bank very early. However, we have what we call delegated approval limits. All our branch managers within the network have a limit. You're able to walk in, a branch manager is able to assess your business, and depending with the limit, then is able to give you some funds. Number 2, we have what we call pre-approved limits. Each and every MSME in the bank has a limit. This limit is refreshed every month. So depending on how you are transacting with us, then you're able to know the amount you can qualify. This helps us to fast track the process of approval. Because diversion, the bank has an array of solutions. There is what we call the short-term financing. There is the investment financing. Don't take your working capital and divert it into an investment project that is not generating you cash flows for the business. Approach the bank for the right solution. If you need a motor vehicle, there is asset finance. If you need a house, or you need construction, there are mortgage facilities that are available. If you need to propel and have liquidity for your business, then you have a discussion on stock finance, LPO finance, working capital, overdraft. That will help you cushion against any downfall of your business. Be open with your relationship managers. Let them understand the business. Let them understand your business model. Be loyal. Ensure each and every transaction that you're doing comes through the bank.
We are now a holistic bank, a universal bank. And if you look at our offering, it takes care of everyone, from the cooperatives, from the corporate client, to the smallest mama mboga, the big SMEs, all of them. We are looking at a solution for all your business needs.
So long as you're a trader, you exchange goods or services across our borders, just reach out to us. You can call us on our lines, or even drop us an email if you can, and even reach out to us through our social media platforms. We'll be able to guide you accordingly.
To grow your business today, visit any Cooperative Bank branch and ask to speak to a business banker.